Hi, are you using Fibonacci in your trading? Hi, it's Larry Gaines, Power Cycle Trading. In this video, I want to show you the key levels of Fibonacci support resistance and how this can really help you in your trading. So, you can see first off the QQQ NASDAQ 100, the ETF, it had a big move down from that swing high back in March to the low right here on March 23. So you can see that today it retraced up to the 382, failed right there, and now it's closing back down on the lows. Now the same thing for the SPY. You can see that it had the big move down, hit that 200-day moving average, and then it's having a little bit of a snapback rally. And what did it do? It rolled into the 8 exponential moving average, and these are key Fibonacci levels right here on a 50% retracement measurement in a 382, and you can see it stalling out there. Same with the Russell 2000 stalling out at the 618, and also on the Dow. So let's just drill down into the SPY and look at that in more detail. That's the one I really like to look at because it really is kind of the broad brush measurement for the economy for the U.S. having the 9 various different sectors that are combined in the SPY. So first off, this is the kind of a sector tracker for the SPY. So there are actually 10 sectors that it makes up the S&P 500. You've got consumer discretionary, staples, etc. So it's a really good broad overview of the U.S. markets. So you can see today for daily rotation, money's kind of pushed back into utilities. That's a safe haven, and you can see where it's coming out of, kind of flat for the other markets. Now let's drill down into the actual ETF SPY. So when you look at the SPY, we've got a couple different measurements we're taking. So we're looking from this swing high back in January 26 down to the swing low here, Feb 9. So you can see that that first move down on the 9th, what did it do? It hit right on that 200-day moving average and bounced. Moved all the way back up to 618, chopped around, and then we had that failure again. Where did it go? Right down again to the 200-day moving average. So the key resistance measurements to the upside were these clusters of moving averages on the daily, but also this convergence or these overlaps of the Fibonacci levels. So we call that confluence, where you have overlaps of different levels. So you can see the real critical area here today was like that 266. Got right there and started to fail, lose momentum. So the next thing is look at your lower time frames. So here's one. I like to follow the 5-minute, 15 minutes so you can really see intraday. So here's the 15-minute time frame. And you can see this purple here. It means that it just triggered out of what we call a volatility squeeze. And now you can see that momentum shifting down. Now it's coming into that 618 retracement right there. So that's about to break, and this purple line here, that's the prior day's pivot point. But a more important level here today, we were watching this opening range low, this red line here. So when it started breaking that opening range low, you can see it bounced into it, failed again. So this was a good place if you wanted to get short, was to get short right in here about 264 on that failure into that opening range low. Now on the break of that opening range low, one of the quick kind of go-to setups that we were looking at to do was a put spread, a put debit spread. So when it broke that opening range low at 264, did the 29 March 264 260 vertical put debit spread, $4 wide, 94 cents. You can see it's currently 137, up $42. All right, so it's very important to keep track of those fib levels for support resistance, retracement failures, and hope this helps.